Coming up in this show, I'm going to bring you my opening comments on the markets. Katie has trade planning with options. She's going to show you amazing analysis and an option trade setup in Tesla. I'm going to bring you trade planning using askSlim tools, looking at the option bias indicator and more, and a quick review of one of the most oversold groups. You'll get our level 4 special. This is one of our best offers ever. And I'm going to bring you my analysis on the stock market, the S&P 500 in intermediate view, and I'm going to show you how to use all of our tools on our multi-chart grid, and we'll look at the market condition monitor in action.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market made some modest gains last week, though still trading narrowly in the same range we've seen for almost 3 weeks. Buyers came early on Monday with an upside gap on a Tesla upgrade and a rebound in Apple, which had gotten killed based on China banning their government workers from using iPhones. A midweek dip came as Oracle earnings came out, and that stock fell 13%, and the Apple iPhone 15 event brought little to no excitement. But buyers quickly regained the edge, despite upticks in inflation, blaming it on oil, as if oil doesn't matter. Of course, we all use oil, and of course, I believe it does matter. ECB raised rates to a record level, but most, including their leaders, think that's the peak. And maybe from our Fed, we'll get one more increase in rates, but that's not likely to happen in September. So all of that thought about interest rates peaking helped the market, and more buyers came in. Still, the Eurozone stocks look terrible to us on our work, and we think that the weakness, the decline that those markets have been in is far from over. In the meantime, oil is surging and interest rates are moving up again. And Taiwan Semiconductor came out and said they are delaying equipment that they use for producing semiconductors, saying that there is an expected slowdown. So it appears there is a disturbance in the force. Friday, we saw the semiconductors weak as the techs led the way to the downside, taking a big chunk out of the gains that we've seen for the week. The stock market has held up well, though, as it's entering a period of risk in our work, in which we expect that the risks will continue to grow. The indexes have been in a tight range for these past few weeks, which we think will extend out still for some weeks, maybe into early October. However, the riskiest period is likely to be mid to late October, and that could bring some sizable moves to the downside. That analysis is coming up. Even if the sharp move to the downside comes as we expect sometime in October, it's likely that it's a nice buying opportunity for a move to the upside into year-end. We'll show you that coming up soon. But that probably will be a time in that decline in October to look at the cyclicals and maybe even old economy stocks for that move that we think will look pretty good into maybe even January of next year, but not the tech stocks. Look at cyclicals and old economy stocks and not techs. For the week, stocks, major indexes, right now they have small gains, but losing it quickly. We'll see if they can even hold through the end of the day. The Dow Jones is the best of the indexes. It's up still less than 1% on the week. Bonds, they're very weak still. 30s, they moved down close to a point, and the 10-year yield's up about 4 basis points on the week. Gold market and silver down most of the week, but good gains here on Friday as the dollar weakens, and that gives them small gains on the week. The dollar slightly up, just a little bit, and we expect that over the next couple of weeks, we're going to see the dollar pulling back. That could be okay for the metals markets. Oil, well, that hit our first target, which was up around 88.89, and the next target we're looking for is up around $95. And overall, we could see it moving over $100 in coming months. So oil, we could expect to stay strong. That's a look at the opening for the market. I want you to go to askSlim.com, get acquainted, sign up for level 1. And it gives you some great stuff every single day, especially on the indexes. Go to askSlim.com and just explore, look around if you're brand new. On YouTube, subscribe to our channel, click the notification bell, and like this video, give it a thumbs up. Follow us on X at askSlim, and any questions you have on anything you see here today, or anything about our education and analysis of the engaging in the markets, you can write to Matt at askSlim.com. This is Trade Planning with Options, and this is a fantastic segment you're going to see here. Katie uses our tools and charts analyzing an option trade in Tesla. There is so much in here. Katie does an amazing job in here in teaching how she does this, how she uses all of the analysis and then applies it to option trading. Now, what if somebody said to you, I can show you how you can get 2 out of 3, about a 66% hit rate, in other words, win rate on your trades, you would say, wow, I want to see this. Well, take a look at Katie's work that she does for level 3 and 4 members. This is just showing you the last 20 trades. And the important thing right over here is you can see that it was 29 wins of the last 44 and 15 losses. This is since she's been doing this work. That's a 66% win rate. This is absolutely fantastic. And I just want to give Katie the proper kudos for her work in here, which has just been fantastic. So watch this video segment. You're going to see the nature of this work and her great ability to teach around our analytical style and her expert knowledge of options trading and especially the Tasty Trade platform. And then I want you to make sure that you open up a Tasty Trade account through our website, and she shows you in this video how to do that. So Katie, show them.
Hi, this is Katie with askSlim, and this is a Trade Planning with Options video on September 13th, 2023. Today we're going to look at a trade idea in Tesla. First, we have our legal disclaimer, the options trades that I demo and follow up on our trade ideas. When I talk about closing, adjusting, or managing them, I'm simply educating around management techniques, best practices, theories around risk management and profit taking, and highlighting aspects of options trading that we encounter as we follow the trade ideas. This disclaimer is specifically related to options trading. For full legal information, please go to the askSlim website or email matt@askslim.com. Let's get started. Before we look at the chart of Tesla, let's look at the market conditions monitor. I have Tesla loaded in here, and we're going to be looking at a trade in the short term, and we are showing a bullish condition. Now let's also go and look at the cycle low timing tracker. We have Tesla right here in the bottom pending category for the weekly time frame. These green boxes indicate a bullish condition, and barring any large downside moves, this will go into bottom confirmed at the end of the week. Now let's go and take a look at the weekly chart of Tesla. Here's the weekly chart. Notice this basing cycle that formed after this prior negatively configured cycle. Now we got our intermediate low right here about 4 weeks ago with a retracement only into the upper support zone. We have this projected to this prior cycle peak right here around $300, but we are currently at a very important level. That's the 78.6% fib of the move from here to here. So it is important to watch to see if we can get through that level. Now we got an upturn in momentum this week with our reversal scout. So overall, this chart has a bullish appearance. Looking now at the daily chart, the short-term low that corresponds with that weekly intermediate low is right here, and Tesla made a nice move off of that low with a change in the reversal scout from negative to positive, some consolidation through here with a neutral slim ribbon, and now approaching that 78.6% fib at around 281 on positive momentum. So if it gets through there, we'll be looking again at that prior cycle peak around 300. Now this has the appearance as of now of forming a basing cycle with a right-hand translation and positive configuration. So we would expect this support zone to hold during the retracement. The support zone is rising, but currently runs from 253 and change on the top to 237.5 on the bottom, with a 78.6% fib at 226.5. We have a daily cycle timing window coming up between 9:28 and 10:06 when we would expect this current daily cycle to make a low and begin moving up into the rising phase of the next cycle. We're going to go over to Tasty Trade. Before we do, please go to the askSlim homepage, hover over that Marketing Partners tab, and click on Tasty Trade. That will take you to a page where you can learn more about Tasty Trade, our preferred options trading platform. If you do decide to open an account with them through our link, that helps you with some special bonuses, and it also helps us. So now let's switch over to Tasty Trade. Here's Tesla. Tesla has a relatively high IV rank at 12.3 with implied volatilities in the 50s in these expiration cycles. So we'll be looking at a short premium trade idea. Now I don't want to go through earnings, so we're going to use that October 13th expiration cycle, the weekly cycle. Now, the sum of the evidence is giving us a bullish bias on Tesla. We are looking for that support zone to hold, and the bottom of that support zone was around 237. So let's go ahead and sell this 235 put. I'm going to do a $10 wide spread. You can make yours as wide as you like. $10 wide, I will buy the 225 put. Now we are bullish on Tesla, but remember that we are about mid-cycle on the daily chart, and this October 13th expiration cycle does take us through the timing window when we expect that daily cycle to form a low. So a move toward our short put is going to hurt this spread. Therefore, I'm also going to sell a call spread and make this into an iron condor that will help us out if we do get a move lower. So let's sell that 300 call, and we'll continue with $10 wide, so I will buy the 310 call. Now the 300 call is right at the expected move shown on Tasty Trade with this brown vertical bar. And it is also the prior cycle peak resistance. So this gives us a total credit collected of $3.15. 315, that's our max profit. The max loss is the difference between the width of the spread and the credit collected, so 685, and that is also the capital requirement to place the trade. Our probability of profit is 62%. We have basically flat deltas and a daily theta around 6.5. Let's go and take a quick look at the risk graph. Here we go. What we want is for Tesla to stay in between our short strikes. We'd like volatility to come down, and the passage of time will help us. If it goes against us, we can roll the untested side closer to at the money to collect additional credit and push out our break-even points. That's our options trade idea for today. We will follow up on this Tesla trade again next week. As always, please feel free to reach out on Discord or via email to katie@askSlim.com if you have any questions or feedback.
This is Trade Planning with askSlim Tools. I'm going to show you one of the most oversold groups using the slim ribbon PO, and the OBI, the options bias indicator. We've seen extreme weakness in the transportation category. And I'm going to give you a quick look at 15 stocks in that category that have shown a lot of weakness. And these tools are going to really help you understand how you can see the conditions and when there's an extreme condition and you may expect a reversal. Let's take a look here as we first look at the Dow Jones Transportation Index, DJT, and you can see in here that it has been extremely weak during this period right over here. Now, the tools we're using right here are the slim ribbon PO right here, and this is the option bias indicator on the bottom here. And on the top is the slim ribbon, which you can see the ribbon there, and we're illustrating it with an area chart that really gives you a good look at when something is bullish or bearish. Now, you can see in here adding the slim ribbon and the slim ribbon PO right there gives you an indication of when momentum is strong and resuming to the downside or the upside. Here's a period where you had weak momentum right in here, as you can see, and what happened during that period was the slim ribbon PO was giving you not only a negative reading, but these resumptions to the downside, as you can see. Here, where it was strong and you had this big advance, you can see that this was green and you were getting upside resumption signals right in there. Here you could see it was actually beginning to turn down, and then you went neutral and then went bearish. On the bottom here, what you can see is that the option bias indicator is telling you the best way to bias your option positions. And that is over here where it was negative, it was best to have a short bias. Here it went neutral, as you can see it's yellow, and then short bias again. And then when it went positive, it was telling you bias to the long side. And here where you see those lighter greens, it's warning you that it's getting a little bit overdone. Now, when you get a little orange dot, which there are none on this chart, that then tells you it's an extreme and likely to be giving you a reversal. The option bias study is very unique in that it uses multiple time frames and also adds in a volatility component so that it tells you when something extreme is going on or when you're trending, as you saw right over here. So this is the transportation index, and you can see right now it's negative, and it is giving you some signals that you could get more downside in here, and this is likely to turn down and give you a bearish signal again at some point in here. But right now, this is negative. Now, when I look at the individual stocks, we're going to go to United Airlines first. You can see in here there's some other information along with this. Now, during this period that the transportation was strong, it was actually a longer and stronger period for United Airlines. And you can see option bias positions were telling you to stay on the long side. It was getting a little bit overbought right over there. Now, what happened was it turned neutral and then went negative and said, let's bias our positions to the short side. Then right over here, you see those two little orange dots? That's telling you that there is an extreme situation right now. What is likely to happen is that it will rally from this level in the 45s to somewhere up here in the 49s, maybe 48s, 49s over the short term. This is an extreme condition, and sometimes it gives you a pretty important reversal. Sometimes it gives you minor reversals. The slim ribbon will tell you that as it improves or does not improve as the rebound comes. Let's get through the rest of these 14 other symbols very quickly, and you'll get an idea. You can see very similar in here. What's different on this one is that while this was bullish, it went to slightly overdone right there, and then it was giving you a series of signals that it was peaking. You can see right there, and that was absolutely perfect. This is a great indicator. Here it tells you stay on the short side, and now it's giving you an indication it is likely to reverse and maybe get up into these 14s that you can see right there. That's American Airlines. This is Delta. This one is not as oversold as you can see, but giving you the same kind of information. Just fantastic look at how to bias your positions in there. And here you can see with Southwest, looks a lot like we saw in United Airlines, but it wasn't as positive during this period over here. It was giving you negative readings, biased to the short side, quite overbought right over here, telling you look for a reversal, and oversold right over here, telling you look for a reversal back up here into the slim ribbon, probably at the worst case. So you got a bounce coming in here in Southwest. If you were short, you wouldn't want to be short anymore. This is giving you a good indication. Here is JetBlue. You can see very overbought right over here, very oversold right over here. This was the peak. This is likely an area that it's going to give you a bounce. Alaska Air, very similar situation. Look at those beautiful long side readings that you had in May and June. The peak that you had in July with that perfect reading there, and then the quite oversold reading there. Here's Ryanair, and this one has got just nothing really overbought or oversold of any extreme, but still telling you how to bias your positions. And here you see another downside signal right over there after it got a bounce in the market there and got past that slim ribbon. So that's telling you it may pull back a little bit more. Here you see when you look at Spirit Airlines, that it's giving you very mixed conditions right in here. As it has started to turn better, it actually went neutral here, as you can see it yellow. So this is actually a little bit stronger than the rest of the group. Here you could see the peak came perfectly. Here you could see the bottom came perfectly on that extreme, we call this a reading of N3 or P3. This is positive at an extreme, negative at an extreme. You don't really have that reading here because this is actually improved better than some of the other ones. Here is Copa Holdings, also in the same group, still reading negative there. Here is HA Hawaiian Holdings. You can see called the top right here nicely on that P3. Here the N3 and calling the bottom, and the rally starting already as it is improving now to yellow, to neutral right there. And now let's take a look at the a few of these stocks in the rails category. Norfolk and Southern, nice peak that it called right here in the P3, a nice bottom called here in the big rally in the N3, still negative, and it may pull back a little bit from here, but that called it perfectly. Let's see if it can hold the rally. Here you can see another one similar to that. As you got the N3 reading right there, it was negative, stay short. N3 says cover, and here it's turning neutral right there as it gets back up into the slim ribbon. Union Pacific, here you can see it's still negative right in here, not giving you an oversold reading. This actually may be getting ready to give you a negative signal right there. So not great when you look at that. And let's just look at FTX and UPS to round out this category. Still negative there in FTX, as you can see, but giving you great readings. Look at this, P3s all the way across right over here, telling you extremely strong right there, and you have to bias yourself to the long side until it gave you that neutral reading and then the negative reading. And UPS, as you can see here, still giving you negative readings in there, bouncing. When it bounces up to the slim ribbon and this gets over right here, it tells you look out for another negative signal right there. So that is the look at the extremely oversold group. You could see the stocks that have given you those very oversold readings and the ones that are still looking negative. An amazing group of tools that I showed you right there that really gives you an incredible feel for the market. The transportation's very, very oversold, but I can tell you that the cycle analysis, which I didn't show you in here, is giving some negative readings and saying the bounce, which is probably going to come very soon, is probably not going to last for a long period of time, and it actually may be setting up to give you some short side readings, short side entries pretty soon. That's it for trade planning with Slim Tools. This is our special level 4 top tier first time subscribers and upgrades. Level 4 for 1 month, just $99. This is our best offer on this ever. 37% off the regular $159 a month. And that includes our premium version of the Market Condition Monitor, just a fantastic app that we have created. It includes all of this on here, our multiple time frame charts with our focus list of 84 symbols, our proprietary studies. You'll get the Slim Ribbon, PO, Reversal Scalp, Market Condition Indicator, Option Bias Indicator, and more. You can import them and view them live on the Thinkorswim platform. You'll get our TOS Live Grid Archive with custom chart grids and our best indicators. Support resources, there are tons of them. You'll come to our live webinars. You'll get our chart analysis and trade planning training, Q&A with the askSlim team on Discord. You'll learn our best practices for utilizing the askSlim custom charts and studies. And you get full access to everything else. There is too much to just tell you right here. You have to go to the askSlim.com website to the top for all of those details and click on Learn More. And remember, that includes our premium version of the Market Condition Monitor. Everything in levels 3, 2, and 1. A special 1-month trial for level 4, just $99. You're going to get a real good sense for everything that we do and everything that we offer here. 37% off. This is a one-time use, and you want to know more about that, write to Matt at askSlim.com. Level 4 special, the best offer ever. This is the stock market. I want to show you lots of things coming up that I think you're going to find very informative. First thing I want you to do is to read this slide because it gives you an idea of what how we approach the markets and how it would be best for you to use what we share with you. So, important slide to read right here. All right, stock market analysis. We're going to look at the S&P 500. It's as an intermediate analysis. And you're going to see the Market Condition Monitor and all of our other tools actually at work here as I bring you this analysis. I want to remind you that I'm going to show the SPY here and some other things, but you can get our full analysis on weekly and daily in the S&P 500, NASDAQ, and the Russell in the indexes, and of course a ton of other work that we do in other symbols by becoming an askSlim level 4 member, and even level 2 and level 3 gets our chart. So you'll be able to get that full analysis on that. But take advantage of the level 4 special that we talked about in this show. All right, so let's start out looking at the charts. We're going to look here at the SPY, and this is the weekly chart in SPY. Now, what we have recently talked about was this period in here, which is a period of risk. And you can see here we had this label as a period of risk right in here, and then we had white in here. These yellow ovals tell you that. And that's where we talked about the ABC pattern declines right in here, as you see, ABC right here, and we were looking for similar right here. Now, we've been in this tight range for almost the last 3 weeks, with the market weakening here on Friday, and the gains for the week dwindling away to almost nothing as we look at this. So we've been expecting a choppy period in here and then a pretty sizable decline. It's pretty likely maybe this comes down for another week or two, tries to rally again, but right over here in this period of early part of October through late October is where that biggest period of risk is, right there, where we would expect it would be moving to the downside. Now, here, when you get past this declining period and you get into these rising phases, they suggest a rally into November and December. In the beginning of the show, I talked about the likelihood that there would be a bullish period in here, and that I don't think the techs are going to lead that, actually. I think it's going to be the cyclicals and some of the old economy stocks that are going to move up there, because I think the techs are just overpriced, and people are going to be, in hedge fund managers and managers are going to be using the funds from that sector to buy some of the other ones. So that's why I think it'll be a rotationary period. And that in this decline, were it to come as we expect, then this would be the opportunity to be looking at those stocks. And we'll talk more about that later on. We talked about this repair level, the 78.6% at 455. Were that to be able to get through that level, then that would tell us that the decline that we expected in here of that ABC pattern was not likely to happen, or it wouldn't pull back in any kind of a sharp way. So that's important to look at. Now, we still note the negative momentum that you can see there on our reversal scout. Just as you see it turned down in here, and that brought that last couple of weeks of a big sell-off right there, and the same thing happened right over there. It brought those really 4 or 5 weeks of a pretty sizable decline there. So we're here looking at still negative momentum, and the highest potential is that it will move down. Were it to get above that repair level right there, as I showed a couple of weeks ago, that would then tell us that there is an alternative, and that the bottom was already seen, and that we are already in that rising phase. So that's really our line in the sand, and that tells us a lot. The a scenario that you see right over here is the lowest probability scenario, where the scenario right here is the highest probability scenario. But we always want to look at both sides. We always want to have a good sense for where our analysis is changing. And it's not a matter of right or wrong. It's a matter of having our analysis pointing to what is the highest probabilities. The sum of the evidence based on all of our indicators and our cycle analysis. And right now, the sum of the evidence tells us that the period of risk is still ahead of us. If the market tells us to change that, we will do so. Remember that we are cycle analysts and do use many indicators, and this right over here on the bottom are the harmonics in the market. These are the wave actions, and you can see in here the big one, the dominant one, shows you a positive condition as the bull market began right over here, and that we have been in this bull market for quite a period of time, and still looking at it to extend out to the 13th, 14th month, and even beyond that. So while we're not looking for much higher prices in the stock market and the indexes, and maybe not even a move to all-time highs, this is still very positive formations that we see in here, and the likelihood when this decline is over with, it will stop in these supports, and then we'll move up again. We have upgraded this based on the time that's passing in here, and while we looked for a move potentially down to 410, we're now looking for 430 down to about 420, as you can see there, as our targets here for this corrective period that we're looking at. So you see what the alternative is based on if this doesn't happen and what our warning will be. So we want to be very clear about that. Let's take a look at all of our indicators here as we look at our grid that has all of them on there, and just so that you understand what's here. Our level 4 members get this, and this is the Russell that you can see right there, and this is the weekly. The reason we have it over here is just to give us the weekly momentum condition, because that just tells us on some of the intermediate or longer term analysis what is likely to be affecting the markets. Here you can see on the Russell that we have in here our analysis on the daily chart, because I have uploaded that to the Thinkorswim platform. I've done it on there, and you can, if you're a level 4 member, you can do so also. Level 3 and level 2 members get static versions of these charts. You could see here the slim ribbon PO is negative, actually turning down again. And here is the option bias indicator, as I showed a great example of. If you didn't watch it in the beginning of the show, I showed the airlines and transportations and how to use the combination of the slim ribbon PO and the option bias indicator. And here you could see this is negative down over here, saying bias yourself to the negative side. Here on the 2-hour chart, You can see it was negative. It is now turned neutral here on the Russell, and the shorter term, which is shown with all of the analysis in the stock in the daily live charts that Matt supplies with all his great analysis in the SIR live stream, where you get all the indexes on that. You could see that this is negative here intraday on Friday, and I'll show you the MCM and how that looks also. So here you can see on the bottom here the askSlim market condition indicator. As it fails here through the swing zone, gives us a negative reading here under -25, which tells you it's in trouble, and you can see in here as it moved down right there. So this is the multiple chart grid that has all of our indicators on it. And let's just look at the SPX right over there, and you'll notice here in SPX it doesn't have the analysis on there. You have to be a level 4 member to be able to upload that on there, and I'll just put that there, and you can see now that's our analysis for a pullback. I can actually blow this up, and you can see the analysis right there, where we're looking for maybe another 3, 4, 5 days to the downside, and then trying to the upside one more time. So that's the daily analysis that you can see. You can see that this is different than the Russell because you have this positive condition right over here, and you're neutral here on the market on the option bias indicator, and you're positive to neutral here on the market condition indicator. So it's giving you a good idea how the S&P 500 is much stronger than the Russell is. And one more peek we'll take in here just so that you can get everything on here is the NASDAQ. And you'll see the NASDAQ in here as I upload the daily analysis, and the same thing, looking for down for maybe 3, 4, 5 days, and then trying the upside again before getting into that period of risk. And again, this is stronger looking at the slim ribbon PO and also looking at the option bias indicator as neutral. That you can see right here, and also seeing this kind of neutral to positive reading on the market condition indicator. And again, look what happened here as this turned negative. And don't miss the stock index report live, SIR live stream that Matt posts every single day. It's running live right now, and you'll be able to get all his great analysis on that. So this is the multiple grid analysis. If you want to see Apple, you can put them all in there. It just fills them all in there, as you can see, and you can upload our analysis if you're a level 4 member. So take advantage of that special for level 4. Wanted to show you that just so that you can get the great idea of how we can refer to all of our indicators and compare the different indexes. So that's, again, a look at the SPY, and this is the SPY weekly, and we can see that it is now moved to the downside for the week, giving up all of those gains that it had, as right now we're looking at some sizable declines of over 40 points for the day here in the S&P 500. So big decline here on Friday, and it could get worse as it's given up all of those gains. Let's take a look at the MCI. I want to move away from that for a second. That's what we showed earlier in the show. And that is the results for the great work that Katie does. This is the intermediate look at the stock market. You can look at, well, I'm looking at the trader version. You can look at the individual time frames. You can see intermediate, this is slightly bullish, though the Russell, as I showed you, is bearish. The Dow Jones is neutral. And there you can see Apple is slightly bearish also. When I look at the short term, you can see these are still showing bullish readings, even though we have this big decline today. So that's you've had bullish readings in here for most of this week in the short term. In the near term, if you were, let's say, just a few day swing trader, you could see these are all now turned neutral. And if you were a near-term intraday trader, you would use that intraday right there, and you can see that these have now turned bearish. And when you look at the SIR live stream that Matt shows, you can see how those turned bearish and the timing that they did, and where the supports are in acceleration zones. You need to be a level 2 member to be able to see that in the SIR live stream. So that's a look at the intermediate right there again. And if you just I can scroll down in here and you'll get an idea as to the how this works and what the different stocks are right in here. This is looking at our 84 best traded stocks, and I can just say, tell me the very bullish in there, and it'll give you those top three, as you could see: OIH, Shopify, and India. And if I look here at the worst three, you have Corn. How do you like that? And Pfizer and IBB. Those are the ones that I'm showing you in the top three of very bearish. So just an amazing tool, and for level 4 members, I don't know how you could possibly not have this. I mean, it's just fantastic. So that's a look at what we're going to look at in here today. I think that that's just an amazing amount of information that I shared with you. Again, the stock market has given up everything this week and is now moving to the downside for the week as risks mount. Especially led down by the semiconductors. Today, after the news came out that Taiwan Semiconductor believes that there's a slowdown ahead, and they are delaying some of their equipment that they use to produce the semiconductors, and that is pushing the NASDAQ to the downside pretty hard, as that's losing 250 points right now here at the midday period. So that is my view of the stock market for this week and using our indicators. I hope that was very valuable to you. I want you to go to our askSlim.com site right now. If you're not a level 4 member, go look at the information. Click the Learn More button. We have never offered 37% off on this before. $99 for a 1-month trial, one-time use, and you're going to get all this information in here, and everything, every single thing that we offer, you're going to have access to. It's just too much for me to tell you right now. Just go to the top of the site, click Learn More. The information is there. You get everything in level 4 plus levels 3, 2, and 1, and all of the amazing support from our team. That's it. I want you to make sure that you go to the site and get acquainted. If this is your first time and you don't want to sign up for level 4, then sign up for level 1. It's going to give you great information every day. On YouTube, subscribe to the channel, like the video, give it a thumbs up, and watch the member videos in the playlists. You'll learn a lot more about us on X. Follow us at askSlim, and any questions you have, write to Matt at askSlim.com. I want you to be so careful. It is so crazy out there. And I'm always wishing you great trading.